What's up, guys? We are back at it again. In today's video, we're going to be talking about the top 3 dividend stocks that I'll be purchasing and I've been invested in. If you guys are interested in any of the topics or any of the brokerages that I'm using in today's video, links are going to be in the description. So just like yesterday, man, we got a lot of people in here. What's up, guys? Elon, Martin, Moto, welcome to the live stream. So we might have a special guest that will be popping in later in today's live stream as well. But in today's live stream, we'll be talking about the 3 top dividend stocks that I'll be invested in. And we can just start off right now after a quick portfolio update. All right, so let's jump right into it. All right, here we go. Today is going smooth. All right, so I just updated this portfolio earlier today, and this is what it's looking like, guys. We are in it for over $250,000. That is the portfolio with an annual income of $5,366. This is a quick breakdown if you guys want to see everything that this entails. So I have some money in the Cash App. I have a HSA Lively account. This is a health savings account, and one of the best ways to invest, honestly. We have a Roth IRA sitting at almost $30,000. We have a dividend portfolio sitting at $46,000. We have the Robinhood portfolio, $167,000. SEP IRA sitting at $500, and the Webull account sitting at $21,000. So we got a lot going on, and man, portfolio's been insane in today's trading hours. So right now it's currently 4 p.m. and this morning was not looking good. So portfolio was down almost $2,200 this morning, and after it completely rebounded. Tesla was a great pickup if you were able to get it under $600. I was planning to go a lot heavier, but we don't know in these type of market conditions, right? So I could have got in at 500, could have bought a few more shares, but I only ended up buying just one share, lowering my average cost by about $2 after buying that one share. All right, so, let's jump into the Webull as well. Webull has been doing a lot better, the Webull account. So X1 is still the stock that's bringing this account down. I need to maybe average in on this. 3D printing technology is still, I believe, if we talked about Kathy Woods has a lot of 3D printing in her portfolios. So 3D printing, I still do believe is going to do well over time. Just right now, X1 has been underperforming. All right, so if you guys are interested in opening up a Webull account, you guys can get 2 free stocks just from signing up. Let's jump into the 3 top stocks, 3 top dividend stocks. Yesterday was the 3 top stocks that I'll be buying. Today is the 3 dividend stocks that I'll be buying. First one is Exxon Mobil. The second one is Walgreens, and the third one is AT&T. So in these market conditions, growth stocks and tech stocks has been taking a big hit. As we can see, like the volatility with like Tesla, the volatility with like the massive sell-offs with like Alibaba, which is a growth company, and a few other ones that we mentioned a lot in yesterday's live stream. But in today's live stream, I want to just talk about some very easygoing companies that I'll be buying. I've had these stocks in my portfolio for years now, at least 2 years. And these guys, man, it's a blessing in disguise, I would say. I bought these a lot during the pandemic, right? And these were my top companies. I could give you guys a lot of bullish cases. I can give you guys a lot of bearish cases as well. But the reason why I originally bought a lot of these dividend companies is because I truly believed that these companies would, do well over time. All right, Exxon Mobil, as we can see, is one of my better performing stocks. Total return is sitting at 30%, up $6,600. Average cost is $43. I still believe there's still a lot of, I can share this with you guys, so it'll be a lot easier, right? All right, I'm going to minimize this really quickly. All right. Put this at the bottom. So Exxon Mobil, let's see, average cost at $43.44. Let's go into some of the reasons to own some Exxon Mobil, baby. So Exxon Mobil has like a dividend yield, right? About 6+%. I've been buying this and it's still 6+%. Back in the day, maybe like 4 or 5 months ago, there was a lot of articles coming out that Exxon Mobil were going to cut down their dividends. And that really dropped the price down. That helped me get my average cost way, way lower than it actually is. But, there's a lot of bullish cases here. Exxon Mobil, they know that they kind of messed up. They kind of messed up with not being green friendly, I would say. I think that's the best way to say it. So, there's been a big shift towards EVs, right? That's why Tesla's blowing up. That's why NIO's been blowing up. Now it's coming back down. CCIV, a lot of these companies, they have a really bullish case for them. A lot of people are, thinking electric cars are going to be the future. But you guys probably already forgot that, Exxon Mobil, they do have smart people working there, all right? They have scientists working for them. They got smart people. They're doing lower carbon fuel in race conditions now. So, back in the days, EV vehicles, they were really popular, not as popular as they are today, but they were popular. And there's what's the word I'm looking for? They've been a substitute. There's other substitute stuff, right? Substitute fuels. So let's go into this, all right? Porsche says they are testing advanced biofuels and renewable low-carbon e-fuels as part of their new agreement to find pathways towards potential future consumer adoption. So this is another substitute for, green initiative that Exxon is trying to pursue. The EV market is a direct competitor to them. So now they have to find different ways, because I'm pretty sure ExxonMobil is not going to create like a electric type of, vehicle or anything like that. But, that's not their specialty, right? So the company says ESO's renewable racing fuel will be tested in Porsche's high-performance motor sports engines in the Porsche Mobil 1 Super Cup 2021. So once they, figure this out, if it does work for them, they could create a consumer version of this, right? This is going to be the super version, like how, we have like 93 fuel, right? I use 93 for my Mercedes, and, they possibly might be able to do something like this in the future if this works out. The collaboration will also focus on e-fuels made from hydrogen and captured carbon dioxide, with plans to test the second iteration of the ESO renewable racing fuel, which will contain e-fuel components as early as 2022. The new agreement builds on the 25-year relationship of developing and testing high-performance products. In January, Exxon unveiled its plan to invest $3 billion on lower-emission energy solutions through 2025 via the new Exxon Mobil low-carbon solution business. And I believe this might turn up. This might be a great investment for them. Not only is it socially responsible, it's also could provide another source of income if they're able to, find an alternative for natural gases and all that stuff. Exxon, I do believe they are America's #1 and biggest gas provider. I do believe that. I think that's why I always choose Exxon over BP. Whenever I fill up myself, if you guys can help me out, you guys could fill up at Exxon Mobil gas stations. I think that will also do the best. OVO gang, baby. Let's go. When will GME go to 10 million? Hopefully soon, guys. Hopefully soon. So ExxonMobil does have quarterly dividends. All right, so let's go into the second one, which is Walgreens. All right. You guys got to be really careful of buying into Walgreens during earnings. All right, guys, because you don't want the market. We don't know how the markets are going to respond to the earning call that will be happening tomorrow, March 31st. So if they had, it's like sometimes they sometimes the company will come out with good earnings and the markets will react poorly to it, and it'll be like a short sell-off. Sometimes the markets will get sometimes the company will get a really bad earnings and the markets will start buying into it. You never know, all right? So just be careful if you guys are going to go out and buy Walgreens after this video. Walgreens Boots Alliance, right? Q2 2021 earnings preview. Scheduled to be announced tomorrow, March 31st. Consensus earnings per share estimates to be $1.12. So it's a negative 26% year on year. And the consensus revenue estimates a $25.9 billion revenue. Analysts expect a gross margin of 20%, basically, and operating margin of 3.4% over the last 2 years. Walgreens has beaten earnings per share 63% of the time and has beaten revenues estimates 75% of the time. Over the last 3 months, earnings per share have been seen 0 upward revision and 15 downwards. So it's expected that they are not going to be doing well. But we'll see. We'll see, because I don't know if you guys wanted to check. I'm pretty sure you guys can check, and you guys can probably get a vaccine, right? Walgreens. This is one of the top searches when you put it into Google. This is going to be bringing a lot of new customers and everything into Walgreens. Probably a lot of people that just never been to Walgreens in years will be going just because of this. This is relatively new, right? It's on the newer side of things. I made a few videos about Walgreens and how they're, adapting to the current market conditions. So this is just one of the things that they're doing, releasing the vaccines. You guys can probably get like a checkup now at Walgreens as well. Not only that, you can go on to DoorDash and start ordering stuff from Walgreens, or that's another way that they're trying to diversify their revenue streams. Let me know if you guys have done anything similar to that. Hey, what's up, Justin? So drop in the chat if you guys have been to Walgreens, in the last month or two, or if you're even getting vaccinated at Walgreens, maybe even CVS. We have 200 people in here. Drop a like if you guys haven't. Really appreciate you guys being here with me today. The technicals on Walgreens look decent. Yeah, we can go into some of the technicals as well. As the pandemic starts to, fade away in everybody's minds, I still believe we're still months away, but definitely we can do this on here. It'll be a lot easier. Walgreens has been on a tear over the last, 2-3 quarters, just been moving up and up. I've been buying Walgreens ever since, the pandemic started in March. Right now, it does seem to be on the just over fair value. Fair value would be roughly around $48. On the high end, it's going to be around the $60 range. Let's take a look at some of the financials. All right. This makes it look a lot easier to read. 2018, 11% year on year. 2019, 4% year on year. 2020, about 2% year on year. So revenue totals have been, decreasing over time, and you can't really fault them for this 2% here. I do think their cash balance, their balance sheet, still looking decent. Look at this. Cash flow should be great as well. But it does seem to be a little bit, I would not go heavy into this right now. I would dollar cost average my way into something like a Walgreens here. But over time, I still do believe, Walgreens, CVS, they're very similar companies. I'm never too worried about my, dividend portfolio. So if you guys have been getting completely crushed on your portfolios, especially on your tech stocks or on your meme stocks, definitely consider dividend companies. All right, guys. I'm doing all of this on the fly. All right. So if you guys so if I ever mess up saying something, correct me in the chat. All right, because I probably messed up a lot over this 15 minutes of freestyling for you guys. This is my dividend portfolio. I wanted to go a little bit deeper, show you guys my exact investments into my holdings of Walgreens. Let me see if I can find that. Walgreens Boots Alliance. I'm up 27% on this so far. So just investing this over time over the last 6 or so months, on top of holding it for over 2 years now, I'm up a decent amount here. On top of that, this is like shooting out dividends every single quarter. Not too worried about this. This portfolio has been doing a lot better, right? It's actually equal now to my Robinhood portfolio. So unrealized gains is 27%. And if we look at this portfolio all time, should be roughly, just a little bit better. So this is 26%. And in my Robinhood portfolio, I still own a lot of dividend stocks. So these are helping me out in performance-wise. All right, so let's go over the last company here, AT&T. So I talked a little bit about AT&T over my last few videos as well. AT&T, I believe, when it comes to their streaming service, right, they have HBO Max. If you guys didn't know, HBO Max is going to take a lot of market share away from Netflix, I believe. And AT&T stock has had one of its best months of performance in recent history following the announcement of the DirecTV disposition. So they got rid of one of their dying assets in DirecTV. They sold it on pennies on the dollar, but AT&T does have a lot of debt still that they need to cover. So getting rid of it and paying down their debt is probably one of the best decisions that they could do. T can be a valuable growth asset to the other more aggressive holdings in his portfolio. So like I was saying, I'm pretty sure this is directly talking about HBO Max. I'm looking for helping hand in the market. Members of the Storm Resist Growth get exclusive. All right. That's a promotion. Oh, we got our first super chat of the day from Ronan. What's up, man? Do you like high dividend tobacco stocks like MO, BTI, and PM? So for my high dividend tobacco stocks, I am in, I can show you guys right here. I'm in Ultra Group. I don't know if they're going to put A at the top. Nope. They're going to do this by ticker symbol. Ultra Group. So this is my position in the tobacco industry. This is a sin stock. People get addicted to cigarettes. Cigarettes was made cool by movies, by the 1970s, 1980s. People are like smoking, especially internationally. Cigarettes are still very popular. But this is my investment into it. I think Ultra Group also made a big investment into vapes, and vapes might be the future of smoking. So great investment there as well. But let's get back into AT&T. As of March 26, AT&T stock is up nearly 9% from 1 month earlier. So like I was saying, when it comes to AT&T, right, I always thought buying AT&T under $30 is a great deal, especially with a 7% dividend yield, or roughly around 7% dividend yield. Currently, my position here is 300 shares. I'm about $10,000 invested, and I'm up 7% since owning this. This does not include the dividends getting reinvested. So if if we take a look at some of the dividends that I've been receiving here. So every quarter, I'm getting 150, 60, 50. I've been getting dividends ever since November 2018. And in 2018, I only got 50 cents. So, doing this over time has brought my dividend to $156. Compounding effect does work, guys. So, I'm just a living embodiment of that, because that's all I do. I collect the dividends, I reinvest it, and that's why my portfolio is the way it is. On top of me reinvesting on top of me contributing consistently over time. So let's jump into some of the reasons here. So 3 reasons to own AT&T at the moment. Diversification. AT&T has provided to be a great portfolio diversifier. After T and the board, stock market decline is lockstep. As the start of the COVID-19 crisis, the telecom stock resumes marching to its own beat. See charts below and notice the rolling 6-month correlation between T and the SPY. So that's what I was talking about earlier this live stream. Because of the tech stocks and the growth stocks, there's been a lot of sell off, and I think a lot of those funds, a lot of that money has been going into dividend companies or longer term growth companies, non-cyclical, especially like AT&T, which is like a 5G stock. On top of, when it comes to AT&T, there's just so many companies, so many product lines within it. It's just a no-brainer, in my opinion. Downside protection. The second reason pertains to the valuation floor. Throughout its long history, AT&T has only yielded 7.5% more once in the fourth quarter of 2020, and for no more than a few weeks. When I believe that the stock was grossly underappreciated, see charts below. So this would probably be the best time to buy into AT&T in 2020. Almost buying anything in 2020 would have, gotten you great returns. Improved business model. Definitely over the last 2 years now, they've been improving their business model. Lastly, AT&T should be witness improved financial performance and investor sentiment with the deposition of U.S. video business. That's what I just talked about earlier in this live stream as well. AT&T turns into slightly more streamlined company focused on wireless, fiber, and HBO Max. If they could get this right, AT&T will be a monster. These 3 businesses have been performing relatively well lately. Premium TV and on the other hand, has been the thorn in AT&T's side for many years. But with video out of the picture, investors should expect to see more improvements in AT&T's operational and financial performance. So those are the 3 dividend stocks that I believe will be performing well over time. Let me know what you guys think in the chat, and we can definitely discuss it. Verizon is better. I think Verizon has a better 5G network than AT&T, but Verizon does not have HBO Max. And with the way things are going, people are cutting the cable cords. People are, getting rid of their Comcast, Xfinity. Personally, Xfinity has been doing some sleazy stuff. So Xfinity, which I still use Xfinity. They have a data cap now, which they're putting it at like 1 tera or like a few terabytes. And if you go over that, they're gonna charge you extra. Which before they just throttled you a little bit, which made more sense. I think they're getting sued for that business practice though. A lot of people are cutting the cord on cable. A lot of people are just like using Netflix, using maybe YouTube TV, and they're losing a lot of business from that. What has more upside? I do think, I'm invested in both AT&T and Verizon. So, but I'm more heavily invested in AT&T. So I think AT&T has a little bit more upside. On top of that, their dividend is pretty good as well. They say they charge you $50 on top of the internet price to go unlimited. I have to look that up. I can't give you that price. But yeah, I'm pretty bullish just off of HBO Max and everything that they provide. I don't know if you guys saw the Justice League Snyder Cut. I could show you guys. Man, I was going to take you to some other website. HBOmax.com. So I think HBO Max is the main competitor to Netflix, the main competitor to Disney Plus. I can show you guys what it looks like. I'm sharing my login with my cousin there. And every single Friday, they come out with like a brand new movie that, would go into theaters. Um, so a lot of these are going to be like blockbuster hits that, because, the pandemic's still here, a lot of AMCs aren't opened yet. A lot of movie theaters aren't open yet. They are, open up on here. And me personally, I like TV shows that, that can go more in depth to the characters. Raised by Wolves is one of the better shows that I've seen. So I really recommend Raised by Wolves if you haven't seen it. Game of Thrones, I'm pretty sure everybody's seen Game of Thrones by now. What else here? Euphoria is pretty good if you want to see some crazy stuff. Curb Your Enthusiasm. This is like the epitome of my dry humor. Curb Your Enthusiasm. It's been going on for like 11 years, and I binge watched all of it over the last like few years. But I think people are getting sick of Netflix, and I believe HBO Max is going to be maybe one of the major competitors for them. Yeah, HBO Max hasn't even gone global yet, guys. So when they do go global, I believe even more market share that will be coming their way. The revenue stream will just start coming in for AT&T, and hopefully they'll continue to pay massive dividends over the years. Yeah, man, Curb Your Enthusiasm. That dry humor, love it. I mean, both companies are great. I own both companies in my dividend portfolio, and I'm just going to be reinvesting everything. So I'm not too worried if one, AT&T is, another company that has been growing rapidly, but I'm not really sure. I don't know why I didn't buy into AT&T. I'm using AT&T as my internet provider. I should probably switch pretty soon, but yeah, that's it's strange, right? It's a little bit strange. Do I have life insurance? I do not have any life insurance. No, I don't think I probably should get it. All right, so we're gonna be opening up the live stream to Q&As. So if you have any questions, just drop them in the chat. We can even look at some stocks if you guys want. But those are going to be my top three. And if you guys have any questions, definitely I can help answer. I've owned these companies for years. Sometimes I don't even look at them anymore. I just dollar cost average. I just throw money at it whenever, consistently over time. Why would you switch from AT&T? I've always had T-Mobile, even before I invested in the stock market, and it's just one of those things that I just never went to switch over. I could probably would be a pretty good idea to switch over to AT&T or Verizon, just to give them another subscriber, just to boost their it's like paying myself almost. What do I think of Coke and Pepsi? I think I own Coca-Cola in my portfolio. Let me double check here. Yeah, Coca-Cola has been in the portfolio for probably 2 years plus now. Return so far is 9%, 9.81%. I don't think this is included in dividends. If you include all the dividends, I think it would be a little bit more. But definitely Coke over Pepsi. Diet Coke, that is. I can't even drink Coca-Cola anymore, man. But, sugar is one of those drugs that should be sugar is one of those ingredients that should be a drug, but it's not categorized as a drug. And, that's like a whole nother health story that I don't even want to get into. Do I own VYM? I do not even know what VYM is. No, I don't own any VYM. I'm pretty sure I own a lot of companies within VYM. So there's really no point of me to have an ETF that tracks all the same companies that I already own. If for anybody is brand new, I think owning a dividend ETF is also a great way to start investing. If you want to go that dividend route. Walmart versus Target. I'm pretty sure there are videos about like these versus companies that you guys keep mentioning. When it comes to Walmart versus Target, I'm definitely a Target type of person, or I like to say Target. Makes it seem a little bit fancier than it is. When it comes to Target, the dividend portfolio, I'm seeing a $600 return here, up 50% from my initial investment. So I went really heavy into Target when pandemic hit, and I only bought 8 shares. Decent gains. I wish I put in more at the time, but I was looking at a lot of different companies, and I was buying a lot of different things at the time. Both are trash. I was using AT&T and Prospect Capital dividends to buy more ABV shares, but just recently I've been letting them reinvest. That is a great idea to reinvest your dividends. If you worked at Walmart, you get shares. I've never worked at Walmart or Target. I know there's some YouTubers that used to work at Target. I think Biahiza used to work at Target. I think that's one of his viral videos as well. Yo, Bruce, what's up with Baba? Alibaba and Chinese stocks have been taking giant hits after hits, guys. I am still invested in Alibaba. It's down 1% today, not too bad. Nothing really going on here, guys. I would just continue to buy in dollar cost average. I'm going to get to 200 shares eventually. I'll be buying more if it dips more. I like to buy more into these companies whenever they dip about 5%. I think that's worth it for me to start reinvesting in more. So as people start to worry and panic, that's the perfect time that I buy in. Yesterday, I talked about that one company, Archegos. I think that's how you pronounce their hedge fund. Basically, this guy YOLO'd on a bunch of tech stocks, and then he got margin called. So now companies like Discovery has been massively on sale over the last 2 weeks or last week. You can see Discovery was at $76. Now it's at $40. In today's, it recovered about 5% as people understood the news and understood what was going on. A lot of other banks will be taking hits from this. So Discovery was one of the companies that was that hedge fund was heavily invested in. Was Disney one of them as well? No, Disney was not one of them. What was the other company? Viacom. Yeah, Viacom was another company that they were heavily invested in. So same thing, right? They had to liquidate their portfolio. They were margin called. They had to sell off a lot of these companies. So there's really nothing wrong with these companies, but because there was someone had to sell billions of dollars worth of it, that's why the price dropped so much. So once like these algorithms get hit, right? Once they drop 10%, the algorithm will start selling off as well, and that's why it was like a cascading effect. And Viacom went from 100 to half the price, which is like $44 now. So you have to go into these companies, see if they're worth $44, and they're probably a bit undervalued at the moment just from what happened, but these could easily dip a lot more. There was another company, internet company, Baidu. Baidu, we saw a 6% gain. So as people understood what was going on, like I'm saying earlier, people started to buy these dips here. So March 22nd, you can see the same thing happen. March 23rd, they sold off Baidu and went from an easy 260 to 175. And a lot of people bought these up. So I think a lot of people found out this was a lot more undervalued than those other two companies and start buying into Baidu. And I think Baidu is one of the Chinese companies that is being threatened to get delisted, but people are still buying into it. Let's see if NEO was one of them. I'm pretty sure NEO was not one of them, maybe. But there's been a massive sell-off on NEO as well. So NEO dropped all the way down to, 34, 35 bucks. I mean, I think if NEO's under $30, it might be a good pickup. But I have to, look at the numbers again. I would most likely sell puts on NEO, if anything. Selling put is a bullish strategy for anybody that doesn't know. And, you can make a few $100 off of this every single week if you guys can withstand the risk. Yeah, NEO is definitely interesting. One of Tesla's main competitors, I would say at this point, within the EV space. Think it will recover, and why Viacom and not Discovery? I thought they were tied together. I don't know that much about these two companies other than, they're connected to the hedge fund that is going bust right now. Definitely worth a look at. Hi, Bruce. Any chance you could run through your portfolio and show us your highest returning stocks? Man, that's a pretty cool portfolio profile picture you have. So I could do that really quickly. Drop a like for the portfolio update, guys. So this is the portfolio. I haven't shown it in its entirety in a while. The Discord community gets full access to everything whenever I purchase and sell any companies. So portfolio sitting at $272,000, about $250,000. I have 53 holdings. And you guys want to see the highest earners to the least highest earners. So here it is. Gap is all the way here at the top. Gap was just, I just bought at the right time. Perfect timing, I would say. Right when Kanye West signed a 10-year partnership deal with them. And I do think, they're going to be coming out with some drops lately. I could even go over this really quickly later. I can make a dedicated video about Gap. So next is Caterpillar. Caterpillar was just one of these companies where I just bought it and for the dividends, and it's just up 73%. So within the construction space, real estate prices are going up. A lot of us can't even buy houses anymore just because they're so expensive, and construction costs are going up. So that means these guys will be getting paid a lot more as well, these construction companies. Nucor is number 3 here. So, whenever I see companies that are massive gainers in this portfolio, I'm not really looking to add into these companies. I'm just going to let them run, right? I'm just going to let them stay there, be great performers. What I'm rather looking at is the companies that are performing really poorly in the portfolio and seeing if I should add more to them or just cut them off completely. So that's another thing to think about. Nike's here as well, 60%. Target's here, up here, 56%. So these companies are, massive gainers just because I timed them well when I bought them. Timing them, meaning I bought them during like March, April of last year. Going down here, we can see some of the companies that has been performing pretty poorly. Square has been hit pretty badly because of the tech and growth sell-off. Microsoft, 20%. I mean, 20% is still great overall. All right. I've only held a lot of these companies for maybe 1 year to 2 years. SPHD, one of my heavily invested dividend stocks. Intel, there's a chip shortage. I think Intel is a good buy at these price levels. If it drops more, I would buy more. Going all the way down here, you guys can see my worst performing stocks, X1, which is a 3D printing company. I'll be really careful jumping back into this, but on today, 6% gains, not too bad. I need to update this. I think I sold this off already. I wonder why this is still here. All right. I mean, that's better. All right, so that's a quick look at it. Bruce, when deciding on a dividend stock, is it better to go based off of dividend yield or dividend rate? That is a great question. Personally, I would look at the entire business first and consider the dividend yield and dividend rate after. Like, dividend yield is not the most important factor here when it's coming to a dividend company. It's more like how much growth can this company be? How much more growth does this company have? Is it undervalued? And that's what I look at first. Dividend yield is like one of the last factors that I look at. Lance G, VTI. VTI is a great investment, I believe. I would, if I could, if I wasn't a YouTuber, I would probably just buy into VTI or VOO, and that would be it. If I wasn't a YouTuber, I think because I do YouTube videos, I have to, look more into, some of these different companies just so I have something to talk about. Airbnb is hype. Samurai Cam, I think you were in my yesterday's video. I don't think Airbnb is all hype, man. Airbnb is a good company with a lot of growth potential, especially after everything goes back to normal, after everybody's vaccinated and we'll be back in it. So we have 369 people in here. Drop a like if you guys haven't already. We are going over the top 3 dividend stocks: Exxon Mobil, Walgreens, and AT&T. I did this freestyle, so just if this live stream isn't that smooth, just bear with it. And if you guys have any questions about these companies or anything, just drop them in the chat. And we're doing live Q&A right now. And a lot of people are into a lot of different investments, and definitely I'm into my own investments as well. You guys don't have to agree with me 100% with everything. Not everything that I'm saying is going to work for you guys. All right. So that's why everybody has to make their own decisions. If I made like $1 million a year, right? I don't make $1 million a year, but if I did, like, my investment strategy would be completely different. I would probably even go more risky with my investments. If I only made $100,000 a year, I would probably invest a lot more, less risky. If I was only making $50,000 a year, I would probably only be investing in, ETFs, right? But that's just how I'm thinking, right? When I have more to lose, I would be a lot more risk adverse, right? I would be investing in stuff that I know that, like, this is not going to go to zero. But when I have like massive amounts of money to invest in, I could do a lot more risking into different companies. And I'm like somewhere in between there now, right? So for every person, it's going to be a little bit different. There's a lot of people YOLOing on Tesla, but meet Kevin, right? He can YOLO on Tesla because he makes about $1 million a week. I mean, he makes $1 million a month from YouTube. So just think about that. But then everybody that's doing YOLOing on GME, that's a different story, right? Let's do a 3-minute breakdown of GME. I mean, this story, I thought it would be done with by now, but it's making a somewhat of a comeback today at $200. There's life in this company. And, there's a lot of news coming out from GME as well. They just hired a new guy from Amazon to be their growth manager. Benzinga, a leading news data provider, held at his annual. Yeah, I'm pretty sure that's what they're talking about. They just hired a new guy from Amazon. Who knows, man? Who knows? That's a different kind of YOLO. Consolidated Edison. I used to own this company. I used to have some exposure to the utilities industry, to the utilities sector, but I got rid of them. I got rid of them real quick. Did I watch the movie Boogie? No, I didn't. GME is disappointment. Definitely. I mean, I made out like a bandit with GME, so I'm good. Where's AMC? AMC, I think it's doing pretty well comparatively. A lot of bullish news coming out of AMC. So at the top here, AMC was at $20. This was late January. Another peak here in mid-March, and now is at $10. Respectable. You have to understand, guys. A lot of people are pumping stocks on YouTube. All right, a lot of people pumping stocks on YouTube. Just be aware, right? I don't think I fall into that category, but I do talk a lot about my investments. I hope, I don't intend and I don't do any pumping, but I do talk about the stocks that I do own and I do love. I don't even know what day trading is, man. If you guys want to make some money day trading, you guys have to have millions of dollars invested. What are the best 3? They're right here on the screen. Top 3 dividend stocks right there in the gray box. Every YouTuber is pumping Palantir. Let's see which YouTubers are pumping Palantir, man. Let's jump into YouTube. PLTR, is that it? All right, we have Belmont Capital here, Learning Finance, pumping it. Financial Education, Palantir, stock all in. I mean, that's a bold statement. Palantir stock, short interest rising. A lot of people are shorting it, I'm assuming. A lot of people are talking about Palantir. I think a lot of people are, interested in Palantir because Kathy Woods, Kathy Woods all in on Palantir as well. Kathy Woods speaks Palantir stock to 500. It's harder to say, it's hard to say that, man. I don't know. But these guys have a lot of professional people, doing the analytics, analyzing it, seeing how far it can go. A lot of people are buying Palantir. Let's see what the price is at. I wonder if I'll get more views if I talked about Palantir. I mean, the trend is your friend. So as long as this is dipping, maybe it could be a buying opportunity. You don't know why it's dipping, but it's dipping a bit, sitting at $21. I might sell some puts on it if I would be interested in it. I use the RSI indicator whenever I can. So whenever Palantir dips under 30, might be a good time to get in. That's just what the RSI indicator is indicating. Data collection. So I would think it's a mid to long-term play. Yeah, man, the more data you have and the more relevant you can get with it. Andrew, Mo, Bruce, and Bruce are the kings. Man, I would love to connect with Bruce stock market with Bruce. I connected with myself enough. Palantir is going to have huge growth in 5 to 10 years. If you can hold onto a company that long and you're willing to hold onto a company that long, then, by all means, it might be a great investment. OnlyFans when? You could sign up for the Discord, the Patreon. Patreon is members only now, so you guys only get the exclusives. David bought 200 shares of Palantir today. Man, that's 200 shares of Palantir. What is that? 200 times 20, $4,000. That's a big investment, dude. 4,000. That's nothing. That's a big YOLO. All right, we got Elon dropping 6K into Palantir as well. So if Palantir went to, let's say, this range again, this $10 range, would you guys double down and invest even more? Let me know in the comments. What's up, guys? We got 400 people in here. Appreciate every single one of you. If you guys are brand new, haven't subscribed yet, please subscribe to the channel. I can drop some knowledge on you guys. We have dividend investing. I look into a lot of these other hype stocks, meme stocks as well, just to understand it, just to get a gauge of, why people are investing into these companies. And sometimes I even find myself investing in some. Like I'm invested in Tesla now. I'm invested into Peloton. I don't think Peloton was a hype stock, but definitely, I could see Peloton going to a $200 stock eventually, right? So if you guys are, you know, I've done a lot of fundamental analysis on Peloton. Like I own a Peloton and I'm using it every single week. I can't say I'm using it every single day. You guys can probably see I'm getting like a little bit fat. If I use it every day, I'll probably get a lot skinnier. Peloton's a great business model, and I'm not trying to hype it, but definitely I think it's worth at least within that $200 range. Right now it's sitting at $100, so a lot of upside, especially with the future growth coming along. I'm going to be trying to get to 200 shares as soon as possible. How many shares of Tesla do I own? You guys can see that right here. Great question, man. One of my dreams is to own 1,000 shares of Tesla, and you guys might not see me anymore on YouTube if I do. Currently, I own 26 shares. If I owned 1,000 shares, it would cost about $600,000. But if I owned 1,000 shares of Tesla, man, you guys would not see me on YouTube anymore. I would trade. If you guys, I would probably trade my YouTube channel for 1,000 shares of Tesla. What are my thoughts on NIO and the EV industry? I think it was approaching to the bubble territory, but now that there was been a steep decline in NIO, Lucid, and Tesla. Tesla was at like almost $900 per share. Now it's at $600 per share. So it's a great opportunity. I think it's like approaching its fair value mark. I still think Tesla is a little bit overvalued, and try it out, man. I love the EV market. It's a great story. A lot, especially with Tesla, really changing how the industry is. I think I saw a great. Am I pumping Peloton? I don't know what Peloton is. I'm not pumping Peloton. I saw a great question. Lemonade is up nicely today. Lemonade is up like 5%. Lemonade, I talked about this in yesterday's live stream. If you guys bought Lemonade yesterday, let me know. If you bought Lemonade earlier this morning at $80, you guys are up a decent amount. 7% total. So I did a sell call on on Lemonade, and I made I can close this out right now and make some money. Lemonade is a great investment. I would buy a lot more of Lemonade under $80. So I think I don't know if you guys noticed, but I bought the I pre-ordered, right, this Cybertruck. I think Cybertrucks will be in production really soon. Tesla Cybertruck could begin production in June. Cybertruck is one of the most anticipated vehicles in recent memory. The unconventional triangle-shaped pickup truck was unveiled in 2019. I think pre-order is like only $100. I think a lot of people pre-ordered this. And I got the highest tier version of it. So I got it with, I got like the dual motors, like 400, 500 miles on it. My brother, he has the Tesla Model Y. And he said, even though they said it has like 300 plus miles for their between charges, he said it only goes maybe like 200 something. So I'm pretty happy that I got like the highest version of the Cybertruck. Man, if I can get both the Cybertruck and the G-Wagon, I think this channel will turn into a car channel for maybe half a year. So stay tuned for that. Subscribe if you want this stock channel to turn into a car channel. Definitely, I got a lot of plans for this. So wherever I go, I'm taking you guys along with me. We're going to be turning into a car channel maybe next year. And then the year after that, it's going to be turning into like a travel channel. Especially if you guys are interested in like moving to Southeast Asia with me. So a lot of different things. And on top of that, maybe by 2 years down the road, I'll have like $1 million portfolio, maybe even $2 million portfolio. And I'll be living off of my portfolio. So, I'm doing big things, and I'm going to bring you guys along with me. We did the first iteration of this channel was cryptocurrency, and then real estate, and then stocks. Next future iteration is going to be cars, and then a travel channel, Southeast Asian type of channel. So, I have yes, Phnom Penh will be the city that I'll be living in. Bruce is having a midlife crisis. So my wife is getting the G-Wagon and I'm getting the Cybertruck. You going to Vietnam? So to get into Vietnam, I need a visa. And I never liked getting visa, so I never went to Vietnam. Jason Lopez, thanks, bro. I'm going to Southeast Asia with Bruce. Come with me, guys. Subscribe if you guys are interested in any of that. I'm so sick of just staying at home every day. I stay at home, go to the studio, and hit the gym. Those are like the 3 main places that I go. So I'm pretty sure 1+ year from now, we'll all be moving around, traveling. I think travel channels are going to blow up within a year from now, 100%. And yeah, man. Why are you moving? So I have plans to start a business in Cambodia. So I'm going to be doing that as well. I have the real estate stuff here. I just got a property manager. So I have the property manager handling everything for me. So that's going to be all taken care of. I'm going to go to Cambodia, start a new business, hopefully bring some massive income. That new business has the potential to make more money than this YouTube business. Unless like something crazy happens with YouTube and, I'm like the next Graham Stephan or I'm the next David Dobrik without the scandals. That's what hopefully I can give you guys inspiration with all that as well to start your own business and to do your own things. I'm scared. A lot of the stuff that I start out with, I never expect it to work out. So you got to just do your best. All right, guys, drop as many likes and as many questions as you can. I'm going to do a rapid Q&A, and we're going to call it for this live stream. Today's Tuesday, right? Yeah, today's Tuesday. How much would it cost to live in Cambodia monthly? I would say comfortably, maybe $2,000. You can probably live if you can afford like 3, 4, 5,000 a month in Cambodia. You could probably live like a king. $5K a month, you can live like a king. You can have like a nice, nice condo, a nice apartment. Eat good every single day. Get a massage every single day. Yeah, you can live good, man. And, it does suck every now and then because they get flooded, but, overall it's great. What is the business you're starting in Cambodia? I cannot disclose that information just yet. I want to keep that on the down low, and I'll update you guys later. I don't know if I should, I could tell you I'll be selling stuff, right? But it's it's like a business to business type of it's a business to business type of service, and I'll be importing stuff from China. I think that's good enough, man. That's all I could say. Bruce, how do you get paid $5K monthly? dividends if you are in quarterly payout stocks. How do I get paid $500 monthly? Dude, you just got to spread it out. Spread it out. You could save. You don't have to spend your you just do the math, man. You can figure it out. Wheat stocks. So I've been I've been buying some Canopy Growth. I don't know if you guys saw that on my Webull account. Guys, sign up for a Webull account, guys. 2 free stocks. Links in the description. Link is pinned up at the top here. Help me out, man. Support the channel. I've been buying Canopy Growth. Where is it, man? Somewhere right here. Canopy Growth, CGC. I own 64 shares. We're down a little bit, but definitely this is my contribution into the Mary Jane community. So don't say like I never do anything for you guys. I'm helping you guys out as much as I can here. Canopy Growth. The financial investor. Welcome to the channel, man. I sold WBA recently and will eventually sell out of T once it recovers to my buy point. You must have got in at a really high price. I mean, it's all good. It's all good, man. It's a market for a reason, right? I know businesses can make more than YouTube for sure. That's why. Yeah, 100%, man. If if it does become as successful as I think it will, I could tell you guys about it. But right now, it's still in its infancy stages, and my wife is going to be helping me out on that end. So it's it's not just me. It's going to be my wife helping me out. You can't do anything by yourself, guys. If you guys want to do anything incredible on this earth, you're going to need a team. You can't do it alone. How much do I make off of YouTube? So currently I make about, revenue-wise, about $10K off of YouTube. That's from real estate. I mean, why financial investor? Why would you sell it if? Why would you buy it if you were just planning on selling it? I was just wondering. All right, guys. So that's gonna be it for my live stream. I got a lot of stuff to handle today. So appreciate you guys being here with me. Subscribe if you guys haven't already. Drop a like if you guys are interested in everything that I was planning on doing. I got a lot of stuff planned, and I wanted to take you guys along. So I'll see you guys in tomorrow's live stream. Appreciate you guys being here with me. Bye.